New Caledonia's Pony is going to supply nickel to Tesla in multi-year deal. Pony Resources said today Tesla had agreed to purchase around 42,000 tons of nickel in a multi-year deal, a pact that is set to make the New Caledonian miner a key supplier of the metal to Tesla. Nickel is an important battery material. Welcome back, friends. This is Armin Harayan from TorqueNews.com. Please subscribe to our channel for more Tesla news and give us thumbs up if you find this report helpful. So Melanie Burton and Gas Tumpis report on today's Reuters saying Pony Resources has said on Wednesday today Tesla had agreed to purchase around 42,000 tons of nickel in a multi-year deal. This is a pact that is set to make the New Caledonian miner Pony a key supplier of the metal of nickel to the United States electric car makers Tesla. Pony, which bought the loss-making nickel operations in the French territory from Brazil's Vale SA this year, added it aims to produce 44,000 tons of nickel by 2024, double its expected 2021 output. Electric vehicle makers have made securing sufficient suppliers of nickel, a key ingredient in automotive batteries, a top priority, and are particularly keen to seek out sustainable and low carbon nickel supplies. The agreement with Tesla and Pony will make the carmaker by far Pony's largest customer, Anthony Burrier, the miner's chief executive, said during a news conference. The 42,000 tons volume was indicative and could vary, he said, declining to specify the duration or other details of the deal. So we don't know whether this is 42,000 a year or 40,000 in a multi-year. The supply agreement with Tesla was negotiated by Swiss commodity trader Trafigura, a shareholder in Pony Resources, and signed last month, he added. Tesla was already associated with Pony as an advisor on product and sustainability standards. The carmaker has also signed a deal to take supply from BHP's nickel operations in Australia earlier this year. Pony initially expects its nickel to supply Tesla's battery supply chain in Asia, Burrier said. Its focus on production and intermediate nickel product that can be processed for batteries has allowed Pony to benefit from rising nickel prices this year and become profitable in core earnings in recent months, he said. However, this virus outbreak in the New Caledonia and plant maintenance are expected to hit output and profitability for the rest of this year, Pony said. It also expects the nickel market to return to a surplus for 4 years from 2022, partly as top producer Indonesia will boost supply before exponential battery demand outstrips supply again, he said. Pony is 51% owned by New Caledonia's provincial authorities and other local interests, while Trafigura, a Swiss company that has negotiated with Tesla, has a 19% stake, and the rest is held by a joint venture between Pony Resources Management and investment from Agio Global. The miner is planning to borrow 220 million euros, which is 254.2 million US dollars, from the French state, subject to approval in France's 2022 budget, on top of a 200 million state loan earlier this year to help cover investment in production and improving waste treatment in its nickel state. Pony will also choose in December a partner to develop a new electricity plant for the site to support a goal to halve its carbon emissions by 2030 and become carbon neutral by 2040, Burrier said. The future power plant will be solar based and replace a current coal fired installation, he added. So Tesla is now getting a partner for large nickel supplier, which is important for building its batteries, because Tesla is ramping up its battery production now in Giga Texas, in Giga Berlin's battery factory. Needs a lot of nickel, but needs also volume production. Volume production is key to Tesla's success, says Rakesh Sharma in Investopedia. Tesla delivered record vehicles this past quarter, as I reported a couple of days ago, despite a chip shortage and supply chain bottlenecks. But analysts are already looking past its recent numbers to forecast future performance. In a note out over the weekend, Wedbush analyst Dan Ives wrote that Tesla production capacity remains key to its success. Here's what Dan said. He said, while the chip shortage has been a clear headwind for Tesla and the overall auto tech industry, we believe building out manufacturing capacity globally remains a key to Elon Musk and its company's success in 2022 and beyond, Wedbush analyst wrote. Tesla, friends, has car manufacturing facilities in 3 locations globally: Fremont, California, Austin, Texas, and Shanghai, Gigafactory Shanghai. And it plans to start production at a 4th facility in Berlin by November or December 2021, according to the company's CEO Elon Musk, who said starting production is kind of the easy part. The hard part is reaching volume production. Musk said that production figure refers to 5,000 or hopefully 10,000 vehicles per week, making 500,000 vehicles per week output, electric vehicles output from Giga Berlin alone. When it was a low volume car production, friends, Tesla had relatively fewer problems in manufacturing. But its ramp up to volume production with the Model 3, the company's first electric vehicle aimed at the masses, exposed it to production difficulties, as Elon Musk has talked about that. These production difficulties translated to instances of the company shipping defective products from its factories. Customers complained at some point about the build quality for Tesla vehicles, which had problems ranging from water leakage to inferior parts quality. But Tesla quickly took care of them, and now most people I hear are very happy with Tesla quality and reliability. Elon Musk said, so prototypes are relatively speaking easy and fun, but reaching volume production with reliable parts and at an affordable price is excruciatingly difficult, Musk told vehicle engineering consultant Sandy Monroe earlier this year. In fact, look at my previous report about Tesla parts and electric vehicle parts supplies. But the company seems to have learned its lessons well. While the chip shortage hampered production at other automotive manufacturers, Tesla crafted innovative solutions to supply chain problems and re-engineered its software to counter chip shortages. When other car companies were reporting a dip in their car deliveries, Tesla had doubled the number of cars it delivered to customers. Wedbush's Ives wrote that the coming online of Austin and Berlin factories to expand Tesla's capacity in 2022 was a major positive for the company. Well, friends, let me know your thoughts. This is Armen Hareyan from TorqueNews.com. Please subscribe to our channel for daily Tesla news. Ring the bell so you don't miss my next coverage, and give us thumbs up if you found this report helpful. And please have a great day. God bless you, everyone, and your families. Peace be with all of you. I'll see you soon in our next Tesla report.